Hello, and welcome back. Hello, and welcome back to another episode of Financial Fix with Sharnella. I want to make sure that I'm touching on the topics that you all want to hear. I want to speak on topics that are most important to you, that are most relevant. So, if you like the content that you're watching, but you'd like for me to talk about different topics that maybe I haven't covered yet, I'd like for you to, number one, like and subscribe. Number two, please send me a comment and tell me what type of financial tips you'd like to get from me. So moving forward, let's move into our topic today. And our topic today is talking about 0% interest credit cards. Okay, so my thing is I have tons of credit cards, but I don't pay interest on those credit cards. And I've opened up those credit cards for a variety of reasons. Some of them I've opened up the credit card because there's a 0% offer, and in the past when I've had investment properties, rather than using my own cash, I would use the 0% interest credit card to purchase any items that I needed for the property. If I needed doors or lumber or anything of that nature. So I used other people's money, in this case the credit card company's money, at a 0% interest offer. And when I paid the property off, then that's when the credit card company would get paid back. So there's many reasons why I use credit cards, even though I don't routinely preach that a lot of people should use credit cards. And the reason why I don't recommend credit cards for majority of the people out there today, it's because a lot of us do not know how to use credit cards responsibly. So today we're going to talk about 0% interest credit cards, and there's a lot of pros, but there are some cons to using a 0% interest credit card. So say for instance, you have another credit card where the balance is about $10,000. And you're paying anywhere between 18 to 24% in interest every month because maybe you're making just above the minimum payments, or maybe you're making a few $100s over the minimum payment, but at the same time you're still paying 18 to 24%, which is very high on that credit card debt. So what I would recommend is if you get a 0% interest credit card, if your credit is good enough, you will get 0% interest credit offers in the mail. So this is the plan. You thoroughly look over your budget and determine how much within the next 10 months or so can you actually pay off regarding that $10,000 debt. Okay? So if you think you can only pay off $5,000 easily within the next 10 months, then I would recommend you open up a 0% interest credit card. And typically the 0% introductory rate usually lasts for about 12 months. Some of them allow 18 months, although those are less accessible. But say you have a 0% interest offer for 12 months. The reason why I recommend that you determine how much you can get paid off in 10 months is because I recommend that minimally 6 to 8 weeks prior to the expiration of that 0% offer, you need to have that balance paid off. So let's go over the pros of having a 0% interest offer. So pro number one to that is the fact that you can move debt from a higher interest credit card to paying 0% interest on the monthly basis. Okay, that is really the best thing about that offer, and it's actually a pretty good pro. But there are a lot of cons regarding a 0% interest credit card if you don't pay it off within that 12 billing cycles that you have to have that balance paid off. So if everything goes well, you have a $10,000 debt on a high interest rate credit card, you transfer $5,000 over because to the 0% interest credit card because you know that in 10 months you can pay off that $5,000. Okay? That's a wonderful scenario. I would definitely suggest that you do that. Now, one thing you have to understand, the disadvantages or the cons related to a 0% interest credit card is the fact that nowadays, unlike 10 years ago, you could transfer a balance without any fees at all. But now you have to pay anywhere between 3 to 5% on that balance that you're transferring. And it's still not a bad deal because right now, if you're at 18 or even if you're at 15%, paying 3 to 5% on the transfer of that total balance is really not that bad. It's probably a few $100s. So if you want to transfer the $5,000 over to the 0% interest credit card in this particular example scenario, again, in 10 months, and I stress 10 months, have it paid off. Because the thing is, if you don't pay it off within that 12 billing cycle, within that 12-month billing cycle, the thing is, the credit card company can do one of, a couple things. The remaining balance could then fall into the higher interest bracket, okay? And the next scenario could be, and you have to read your fine print, if you don't have the entire balance that you transferred over to that credit card paid off within those 12 billing cycles or however many months they give you, they could attach that interest from day one that you should have been paying on the full amount. And that's how some people have actually, using a 0% interest credit card has backfired, because not only now are you, if you don't pay it off within that 12 billing cycle or that 18-month billing cycle, they're going to attach, in some cases, all of that interest from day one on that $5,000 that you transferred over. And in addition to that, remember, you had to pay upfront 3 to 5% to transfer that money to that 0% interest credit card. So again, if you follow the offer the way it was designed to work, you'll be fine. But if you do not pay it off, or you don't think you can pay off that balance within the billing cycle, by the time the 0% interest introductory rate is over, I do not recommend opening up a 0% interest credit card and transferring any balances. I think at that point, you really need to figure out how to restructure your debt to get it paid off effectively. And I have worked with clients to help teach them how to safely transfer those balances over to a 0% interest credit card and actually get those balances paid off with no penalty. And another important thing is, when you open up this new 0% interest credit card, if you find that that is a good route for you, do not use that card to make additional purchases. Stop using credit cards. A lot of us have designed our lifestyles around the fact that we can buy now, pay later. And I like for you all to really reconsider that type of lifestyle, because at that rate, you may never pay your credit cards down. And in most cases, the credit card balance will just continue to go up over and over each month. So be very careful. But again, I've used 0% interest credit cards. I know how to use them effectively. And most of the time, I will actually have the money in my account readily available to pay it off at any moment. But if I can use someone else's money, 0% interest, to do something that I want to do, buy something that I want to buy, then why not? I will let my money sit in the bank or whatever other investment that I'm tied to. I will put my money safely in this other investment, maybe a CD, maybe it's only earning 4 or 5% in a CD. But at the same time, if I'm on 0% interest and there's things that I want to purchase, whether it's for an investment property or whatever it may be, I know how to play that game. And yes, it is a game. And you have to learn how to play it very carefully because you can get caught if you don't. So thank you for watching Financial Fix with Sharnella, and definitely like and subscribe if you like the material that I'm offering to you, if you find any value in it. And also, don't forget to comment and let me know what topics you would like for me to speak on next. See you on the next episode.